President William Ruto has assented to the Finance Bill 2025 Thursday morning at State House, Nairobi. The Act has not proposed any new additional taxes, a departure from the norm. The Act sets out a fiscal intervention to enhance a business environment for investors and reform the tax regime. It has proposed several amendments to various statutes like the income tax, a value-added tax, excise duty, miscellaneous and levies, and the Stamp Duty Act. The Act seeks to enforce tax reliefs and exemptions for employees, especially on gratuity payment and pension scheme allowances from taxation.
The new legislation is the amendment to the Income Tax Act, requiring all employers to automatically apply all applicable tax reliefs, deductions, and exemptions for their employees. This measure, designed to alleviate the tax burden on salaried workers and eliminate bureaucratic obstacles that previously hindered the full utilization of available tax benefits.
Among the seminal legislative proposals carried in the bill include the prioritization of the Kenyan worker within the fiscal framework through proposed amendments to the Income Tax Act, mandating the automatic application of employee tax reliefs and exemptions. In addition, the bill proposes the exemption of gratuity payments and pension scheme allowances from taxation.
Additionally, the new law provides for tax exemptions on gratuity and allowances paid under pension schemes, allowing with an increase in the daily tax-exempt substance allowance from 2,000 to 10,000 shillings. Other highlights of the Act are the reduction in the capital gains tax rate from 15% to 5% for high-value investments certified by the Nairobi International Financial Center Authority. On digital assets and virtual services, the digital assets tax has been repealed and replaced with a 5% excise duty on transaction fees payable to virtual assets providers, aimed at promoting innovation and investment. Further, under administrative charges, the period for processing tax offset and refund applications has been extended from 90 to 120 days. A new 5% excise duty on betting, gaming, prize competitions and lottery tickets has also been introduced under excise duty reforms. To promote further investment in digital infrastructure, the Act now grants a tax exemption on investment allowances related to the acquisition of spectrum licenses and the rights to use fiber optic cables by telecom operators. Both the Finance Bill 2025 and Appropriations Bill 2025 have been signed into law by the President this morning. Alan Auko, Lunchtime News.